Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel dedicated mostly to the top-down analysis of different financial securities. And today we're going to be looking at the Forex currency per Euro USD. So as you all know, I do my top-down analysis using pure price action trading strategies. So without wasting much time, let's get started. So I'm currently on the monthly time frame, and we looked at this currency pair last week, and we were able to conclude that the Euro USD is going upwards. In other words, this currency pair has been bullish for quite some time now. So as that bias changed, because of course on the monthly time frame we try to get our directional bias. So if I'm to zoom in, we can see that today is the 1st of October. This was the month of the candlestick represented the whole of September. So we can see that price pushed upwards, but the sellers gained some momentum and pushed the price downwards. However, I still believe that Euro USD is going to continue going upwards and that our destination would be this next resistance zone. Of course, you know that the two major things we do on the monthly time frame, aside getting our directional bias, is also to plot our key zones. So I have a video dedicated to plotting key zones on the higher time frame. So if you are not very good with doing this, you can check out the video on the channel. So our directional bias is bullish for Euro USD. So we'll go to the next lower time frame, which is the weekly time frame, where we try to get a structure or chart pattern of the market to work with. And from last week, we were able to spot an inverse head and shoulder pattern. And like I said, you have to be very experienced to spot this, because it becomes much clearer on the daily time frame. So if we go to the daily time, you can see that we have the left shoulder, the head, and the right shoulder, and we're able to also draw our the neckline last week. So this was a neckline that we got. I explained that in trying to trade the inverse head and shoulder pattern. So when you have this as the left shoulder, the head, the right shoulder, I said then wait for the neckline to be taken out, wait for a retracement, and then we can buy our trades. So in this case, we'll have this as what? The neckline. So, but there was something that I explained which actually played out last week. What I tried to explain was that this is a textbook explanation, that most times when the neckline is broken and there's a retracement, price does not necessarily get to the neckline and start going upwards. That sometimes the market makers make sure that the price goes below the neckline to grab a lot of liquidity, and that this setup remains valid unless the right shoulder is taken out. So if price are taking out this shoulder, then automatically this particular setup would have become valid, because I know a lot of people are jumping into sell the market now, which I believe is okay, but you have to be very sensible in doing so, because if we are to take this whole explanation and apply it here, so what the market did was the market broke above the neckline completely with this green candle, and there was a retracement, but on getting to this the neckline, price sort of baited people into buying and then came downwards to grab liquidity. However, price failed to break beneath the right shoulder. So you can see that price got here and has started pushing upwards again. Currently at the neckline, and sellers are still doing their thing, trying to push price downwards. So what am I trying to say? The market is still going upwards. And why did this happen? This happened because if I am to bring my Fibonacci retracement tool and place it here from the swing low to the swing high, we can see why price came beneath the neckline. Price came beneath the neckline because the Fibonacci retracement to what I call the golden zone, which is the zone between the 0.618 and 0.5 mark, clearly aligned with the with part of the right shoulder. So because of that, price came downwards into the Fibonacci retracement zone. You can see clearly that price came in here and is being pushed upwards. So the next thing, the last of my confluence would be to include what? The trend line. So if I'm to place the trend line here, we can see that the retracement of price did not only come into the Fibonacci retracement zone, golden zone, it also came down to make what? A third touch of the trend line. So we have the first touch, the second touch, and this is the third touch of the trend line. So we can see that everything still points to price going what? Upwards. So if I'm to take this out to make it much clearer for us, we can see the inverse head and shoulder pattern. Price coming beneath the neckline but coming into the Fibonacci retracement 2 golden zone and is currently being pushed upwards. However, because price is back, because this now acted as a support zone before, but now acting as a resistance zone, then you can understand why sellers are still trying to push price downwards. So the question I always ask is, how do we take advantage of this setup? The most or the safest way to engage in this setup would be to wait for price to break above this neckline again, wait for a retracement, and then take our buy trades. However, if you are able to get bullish chart patterns on this by way of this neckline or beneath the zone, you can as well take your trade. So if we go to the one of our entry time frame, which is like the hourly and the minute time frame, we can see exactly what's happening. One of our methods of taking entries is the counter trend line method. So if I'm to impute a counter trend line here, we can see that on the 4-hour time frame, our counter trend line has been broken clearly, but price is still being resisted by this former support now turned resistance zone. So if price once price is able to clearly break out of this zone and there's a retracement, then it will be advisable to jump in and take our buy trades. However, because there is nothing absolute in this market, there is a lesser probability which could still happen of price. As we can see, sellers are pushing it downwards, of price coming downwards to take out this trend line and take out this right shoulder, make a retracement, then we can start favoring selling opportunities. So that gives us both perspective of what could likely happen in the market. However, I'll be favoring the latter. I'll be favoring the former, which is still continuing its upward direction to happen. So this is my take on the Euro USD, the popular Euro USD. So if you followed this last week, you can compare this analysis with what we saw last week, and then you can as well compare to your own analysis and make better trading decision. Welcome to another new trading month. I believe this month is going to be fruitful for us all as we engage in trading the market. So like I said, this is a trading academy. Our um, October classes start today, and if you're interested in registering and learning from us, then you can contact us via the details on my YouTube bio. Also, I have a Telegram channel where I drop trading tips from time to time. I'll be attaching that to this particular video. If you haven't joined us yet, you can do well to join the channel. If you've gotten any value from this particular video, it will only be fair if you click on the like button and share with others to gain from it as well. Don't forget to subscribe to be the first to see subsequent analytical videos also. So do enjoy the rest of your trading week, and cheers.